Hey, how you doing, traders? Welcome back to mentfx. So we just released a video about the accumulations and the beautiful trade that we sent out and were able to get involved in over the previous day, because we were trading on a very low time frame. So this only took what was it, 4 hours to take place. And while doing this, I also received a lot of comments, and I keep getting comments about what is known as the ICT propulsion block, or also just the order block that forms a new order block that forms a new order block. That's the easiest way to think about it. This video is going to be very quick and is going to basically talk about that idea, okay? But how it works and why it works and how you can see it in charts, which is actually one of the reasons we were able to catch this trade right here, this one, the 14, right, is ultimately consider what we considered before for a normal order block, right? We have some kind of liquidity being created in the market on both ends, right? In the form of stop losses, buy stops, and sell stops, right? We have that huge push from on behalf of the composite money that might have sold here, right? Might have sold in here, wherever it might have been, because they're always selling. That sold extremely heavily into this position, right? Taking out these areas right here, and then buying up rather quickly to move a lot higher, maybe mitigating just a little bit before continuing higher. And now our expectation from the standpoint of smart money, in very simple terms, is to expect for price to come back into this order block, whether it's the open of it or about 50% of it, right? And then expect prices to then continue higher to either new highs in the form of liquidity, right? Or to just continue higher to fill an imbalance or an order block before continuing significantly lower, right? Taking out lows and all that other fun stuff. Now, what's interesting is, as we understand, this move here occurs because they need to close out a lot of their negative positions that they have basically sacrificed at this area when they took price higher. So when they come and close and mitigate those positions, they can then continue taking their buy positions that they might have not fully closed yet significantly higher to take more profits above those important areas, right? And then facilitate more trades in the market between retail or emotional people or other funds, companies, banks, whatever it may be, and take profits. Now, what's interesting is when this occurs, oftentimes you will actually have a new order block created, especially if it's based on what we call structural, just structure in normal terms, just structure in the market. Usually structure will form off another area of inefficiency. So what happens when price basically hits an old area, then creates an order block, and then hits that order block again, and then continues up, you actually create what we call a order block 2.0 or ICT propulsion block, or the order block that is formed off the previous order block, which is now considered our next area of potential mitigation. And why does this happen? Well, because for a second, just consider the fact that the composite man is constantly buying and selling, constantly facilitating trades between buyers and sellers. So what's happening in this case, right, when they're making their move back down, is they're also, so the composite man sells up here as well, right? He sells into this, but as he sells into this, he buys, okay? Or she buys, whatever, whoever the composite man is, doesn't really matter. Sells again, right? Why? To get below the illiquidity, right? Because people are starting to see this as potential trend lines or anything else like that that's considered potential retail, right? Buys up, right? Another sell. Maybe then we start finding a little consolidation within a previous order block, right? Why? Because now we're mitigating. So we have some mitigation here, and we have a lot of buying and selling on behalf of the composite man and on behalf of emotional retail traders or people that are not as well-versed in smart money concepts or whatever you want to call it, right? So lots of buying and selling occurring in this mini consolidation here until we finally have some move down, right, from the selling of a composite man. Maybe this happens during Asian session, doesn't really matter. And then this huge move up, right? Now, when this occurs, what do we start expecting? Well, this is now the exact same thing that occurred right here, right? This is that fractal nature of the market. And this can happen on a much lower time frame. It can look on this time frame, this move, so we had this down move, up move, this move that came down could have looked like this. However, this move here on a lower time frame can now look like what? Those equal lows that move through, right? And this continuation upwards, or potentially some Wyckoff. Now that we're looking at a lot of Wyckoff, right? Preliminary support, selling climax on macro rally, ST. Here's your move down to make that ST and B. Maybe some move in here, right? This spring, here's your test, and then it takes off, right? So this all could be the thing happening in here, right? It could look like that, or this thing alone on a lower time frame would look like that Wyckoffian accumulation. The reason I draw this and draw your mind to it is to basically paint the image in your head that everything is fractal. So you can't look at one time frame and just expect to understand what's going on. You have to think of it in a fractal nature, which is why we started teaching from a standpoint of top-down analysis, right? From the monthly all the way down, right? So even if I'm looking at the monthly chart, I might be getting 1 minute scalps, right? It's not just based on the monthly chart, but it's based on how the bulk of orders or institutional order flow is moving through the market. Okay, so when we do have this occur, right, on a lower time frame, how does that look? Well, on a lower time frame, it's going to look a lot more like this, right? We have something like this occurring, right? Trend lines being formed, a lot of retail is getting involved. That's this down move here, right? Potentially, we have some kind of move like this, right? And then you finally have that huge move from composite man down, taking out all that last bit of liquidity, maybe creating that Wyckoff buy, whatever, that Wyckoffian accumulation, right? Then you finally have that huge buy up, right? Taking out the highs, taking out highs, right? And then you have what we call the formation of, again, an order block, right? So on a lower time frame, it's going to look a lot more dynamic. There's going to be a lot more detail within this on a lower time frame, which is why we understand that we can trade much lower time frames. So like, even though on a 15-minute, we might not see all the plays within this area, on a 1 minute, right, we can see a lot more of what price wanted to do and what might be behind the price and how the footprints or composite man is getting involved in this market. Now, when this occurs, right, what is this area now? Well, that's now the same thing that happened here. It's pretty much an order block, just on a lower time frame, and it might not look the same on the same time frame, which is why we start considering price from a fractal viewpoint, understanding that it can repeat the same things it does on higher time frames and lower time frames, right? And again, from this same standpoint, this whole thing here on an even higher time frame will look like a normal 2 candles, right? That's something huge. Just studying this and understanding this can do a lot for you in terms of perspective, okay? Now that we've outlined that, right, we'd now be expecting this move back down into it to mitigate, maybe mitigate a little bit more of it, and then this continuation upward, right? So here we have that move back in, right? And now what's cool is understanding that we were on this higher time frame bias, looking to take out more highs, right? Where's price most likely to make its way? Well, now it can make its way here. And this is how you look for those higher R trades, right? Sometimes not entering on this area here with your stop loss right here, right? Thereby making your stop loss pretty much the equivalent of this box here. I don't like that. Let me go like this. Making it the equivalent of this box right here. Let me see if I can make this like red or something fun. All right, I can't, doesn't matter. So instead of making it the equivalent of this right here, right? This is your original stop loss. So if we just copy paste this and move, I don't know how to copy paste. Beautiful. All right, doesn't matter. Let's just leave it there. So instead of your stop loss being this and your take profit being right here, right? Thereby making it literally about, if you compare these two, this is about 1-to-1, maybe 1.3 or something. I'm not sure. And instead waiting for this to occur within that area and then trade this with this as the stop loss, I mean, with this as the entry and this is the stop loss, well, now you've changed your stop loss from, where is it? From this entire area to this area right here, right? So compare the difference of that. Your stop loss is about 1/3 of that. So now when you're targeting the areas up here, right, the difference between these two is now about 1, 2, 3. So this same 1-to-1 trade, just waiting for it to give you that next block that's created in the block or beyond the block, will give you an opportunity to make a 1-to-5 or 1-to-6. Now, what's interesting is, so this is a propulsion block, right? But as this right here occurs, okay, so let's get rid of this. Oh God, that's terrible. So as this right here occurs, okay, there we go. As this move right here occurs and hits this order block, continues higher, right? Continues higher, right? And then potentially makes a low. What is this area right here considered now? Well, this is considered the same thing as what we saw here, right? Or actually this is right here, right? So here's that move down into this area. Here's that move up. So this whole thing here is actually a new order block, right? It's the order block 2.0 or the ICT propulsion block, whatever you want to call it. This is an order block now, right? That's how we actually caught the trade right here. So what's happening is we can look to be entering maybe off 50% of it, right? Because you don't like how big this is. So now what happens is if price does, it doesn't have to, but if price does make its way back into this inefficiency before continuing significantly higher to take out new highs, right? Also thereby, if you just want to understand this from a retail perspective, taking out, you know, trendline liquidity, as you can see, that's, so if we just draw smart money concepts, you start noticing how retail gets stopped out in this market all the time, right? And they start thinking this might be, you know, resistance, and then you have these movements higher. If price does come here, right, you've now moved your stop loss to being the equivalent of pretty much this area right here, which, as you'll notice, is, again, very small compared to what we had here, about 1/4 of it. right? And then you were targeting that area higher. Well, now what's interesting is here's your 1, right? So here's your 1, I don't know, 2, 3, 4. So about 1 to 4, 1 to 5, whatever this might be. So what's funny is entering here versus entering here gave you the same RR or relatively same RR, or in some cases can give you an even bigger RR by entering after the footprints of smart money or the composite man showed you what it wants to do. So that's exactly what happened here, right? We didn't enter on this 1 to 105. It would be great. Don't get me wrong. Would have loved it. Would have been billionaires out here with my Lamborghinis. Too bad I'm not, right? We had price come down into here, move away, create another option to get in off order blocks. We didn't even enter this, right? But this was a potential enter. That would have given you 1 to 6.19. Recognizing that the real order block technically was here. Although you could have traded this one, right? And that would have given you about 1 to 19, which would be actually better than this one. But the reality is, if you were safer, you'd understand that you'd be mitigating below the low. However, as we continued higher, right, because we were on a 1 minute, what did we start doing? We spoke about this in the last video, so check it out. But in reality, what did we do? Create an order block, moved higher. Create an order block off that, moved higher. Create an order block off that, moved higher. Create an order block off that, right? Which created this order block within this. There you go. Here's the creation of that order block, which moved higher, which created this order block, which moved higher, which created this order block, which moved higher, which created this order block, which then moved higher, which then began to create more mini order blocks, right? So came back down, created this order block, didn't mitigate it to the pip there, but maybe if you waited right here, you might have gotten in. Let's take a look, right? There you go. Continued higher, created this order block, right? Off that order block, potentially, there you go, hit it and moved higher, right? Created that order block off that, hit it, moved higher, right? And this continues. And you can see how powerful this is, because the second you understand that order blocks are created off order blocks are created off order blocks, right? Why? And why are they mitigated? Well, because all of this that was happening here with a negative position that had to get mitigated is occurring here. And it's occurring on a fractal nature in every bit of the market, right? So that's why we can get lower and that's why we can get higher. And we don't care what time frame we're on or how much pips we're risking to make how much. What we care is how we're getting into it, how we're structuring our trade, and how we're partialing out of it as we're moving upwards. Okay, so, right, you can already see it. I just showed you a little bit kind of back testy, but it was poor because we already know it's going higher. But if you know we're accumulating to go higher and we're potentially at least targeting the areas up here, and then potentially even the areas up here, every order block that begins to form is an ability for you to get in, right? Now, again, when I say this, that does not mean that, for instance, this order block here was the one that, you know, you lose out on and then you're confused, right? Why didn't it work? Well, that's because sometimes we need to create those intermediary lows that are going to be taken for liquidity to move higher, okay? But if you notice this, as we move through those lows and do challenge the main order block that existed back here, then we did create that order block right there, right? And if you want to then keep moving it, here you go. Whoops, here you go. Here's another opportunity to enter right here. And then off that, we create that new order block that we could be looking to buy, right? So we're looking for it to maybe come back in there. If it does, let's take a look. Does price make its way back in there? No, it does not. So maybe you don't get involved there, right? So maybe you only had 1, 2, 3, 4, 5, 6, 7, 8. Honestly, you had maybe like 9 ways to get in. So sadly, not too many ways. I don't know, 1 minute chart, but you could have gotten involved in this market the entire way up. And the funny thing is, again, like we showed you in the last one, we sent out the trade, perspective-wise, analysis-wise, from this order block here to go higher, right? Now, what's funny is if we waited for this order block right here to form, right? And not even take it here, wait for it to go away, noticing that price wants to go higher, and then look to trade this order block here, we wouldn't have gotten involved, right? Maybe if we had a higher preset on, right? Maybe this down move from here, right? The actual down move that occurred, you could have gotten involved. However, the real order block was actually here, and you can see we did get that re-entry. And what's cool is if you did take that, instead of taking this and waiting for that new order block to form, right? This goes back to the idea of trading within the middle of the trend instead of trying to pick tops and bottoms. Wait for it to show you what it wants to do. Wait for your friend to jump off that cliff. Then get involved, right? Like, make sure it's safe, then get involved. And then you can still target that exact same area as per the analysis, right? And now, instead of looking to make that, here we go. Instead of looking to make that 1 to 14 that we did, right? You can be looking to make that 1 to 32. Right? Of course, you'd be partialing out better, but if you still took partials at these areas, that first partial on its own was about 1 to 12, right? Which is pretty much the equivalent of the entire move that we actually caught. So this is why blocks or order block 2.0s or ICT propulsion blocks are very important in your strategy. And they can be employed whether you understand Wyckoff or not. if you are looking for a certain area structurally on a higher time frame to be traded to or from, right? On lower time frames, you can start to look what within these areas for those order block formations, and then get involved, right? And then that stop loss can be a lot better than the main stop loss that you would have had to employ in the first point. So that's how you want to trade the blocks that are formed off blocks, and that's how you want to look for them. So I hope that made a lot of sense. This video is a little bit faster, and it was based on the accumulation video we just came out with. So hope this made good sense. If you enjoyed it, please like, please subscribe. If you didn't, dislike it, but let me know why. Thank you so much for the exponential growth that we've had so far. I hope a lot of this stuff has been helping you guys, changing your perspective, influencing your trades. Doesn't matter whether you're part or not part of the mentorship. Either way, I try to put out as much as I can for you guys out here too. And I'd love to know from you guys if you are learning a lot. Thank you so much. And I'll see you guys in the next video.